Okay, let me start. Sechua Annam Limited manufactures personal hygiene soaps and related products at their factory in Takoradi. The company commenced business on 1st April 2016 and had an assessed loss of 150,200 cedis for the period ended 31st December 2016. The company recorded a net profit of 762,800 for the year ended 31st December 2017 after taking into account the following transactions in the income statement. 1. Gross rental income of 180,000 received from the leasing of one wing of the office building. The rental income portion constitutes 10% of the office building. The registration of trademarks at a total cost of 75,000 in respect of the company personal hygiene soaps that is to last for 10 years. The research and development expenses incurred in connection with these soaps amounted to 15,000 and the company intends to expense it. The legal cost incurred to complete the registration of the trademark was 5,000. Okay. A donation of 120,000 worth of furniture was made to a government local government assisted school as part of the company's corporate social responsibility program, which was acknowledged by the Ghana Education Service. Depreciation of fixed assets of 57,000. Replacement of two motor vehicle engines costing 51,000. Exceptional costs amounting to 150,000 as a result of the production manager sustaining an injury whilst working on one of the production lines in the factory. The production manager was rendered incapacitated and resigned as a result of the incident. 35,000 of the costs relate to the payment to the production manager as severance pay. 110,000 was used to acquire additional computers. The remaining 5,000 of the cost represent fines imposed by the Factory Inspectorate Department of the government following the incident. Purchases of computer server for accounting and human resource needs at a cost of 20,000. Additional information. Details of the company's other fixed assets at cost are provided below. These were all acquired or constructed during the year to December 2016. Factory building 800,000, plant and machinery 510,000, office building 420,000, furniture and office equipment 60,000, motor vehicles, goods vans 130,000, computers 30,000. Required: calculate the capital allowance claimable by Sechiwa Annam Industries Limited for the year ended 31st December 2017. II. Calculate the chargeable income of Sechiwa Annam Industries for the year ended 31st December 2017 and the tax payable. And the tax payable. Okay. Hello, can you hear me? Are you there?
Yes, we
Okay,
are.
Yes, yes, we can hear you.
very good. Okay, so we have a business income question, and then we are supposed to calculate the capital allowance and then also the chargeable income of the company. Okay, so let's start. Uh, transaction. Okay, so let's start with the capital allowance. So capital allowance. Okay, so the question says we should calculate the capital allowance claimable as at the end of 31st December 2017. Okay, so remember capital allowance, we said that there are five pools. There are five pools where assets of a company are categorized, or assets of companies are categorized. So we have pool one, pool two, pool three, pool four, pool five, and each pool and the capital allowance rates. So we know that pool one or class one is 40%. Class two is 30%. Class three is 20%. Class four is 10%. Class five is useful life. Okay, so these are the capital allowance rates for the various classes. So the first thing we need to know is we need to classify all the assets in the pools, the various pools. So let's go back to the question. So we are starting with the work. So you put the name of the company, Sechiwa um, Annam Sechiwa Annam Industries. Okay, limited. Sechiwa Annam Limited. So Sechiwa Annam Limited. So computation of capital allowance. Computation of capital allowance for the year ended 31st December 2016. Okay, so we have to go to the question, and we were told that the company started operation. This company, Sechiwa Annam, started operation on 1st April 2016. On 1st April 2016. Okay, so what you should know is that capital allowance is calculated from the time that the company started operation, from the dates, the day, the month, the year the company started operation. Okay, so when you come down here, okay, all these notes are for 2017. Okay, all these notes are for 2017. So, but we are looking at the assets of the company in 2016. You see, these were all acquired during the year to December 2016. So these are the assets the company acquired or constructed in 2016. So we have factory building, plant and machinery, office building, furniture and equipment, motor vehicles. So and computer. So we know that computer is class one. Motor vehicle is, what class is motor vehicles? Who can remember? Motor vehicles is class two.
Class two.
Okay. Furniture and fitting is class three. Office building is class four. Plant and machinery plant and machinery is class three. Then factory building is class four. It's a building, so it's class four. So it means we have um, class one, class two. We have class one, plus 2 plus 3 plus 4. Okay, so class 1 we have um, computers. Okay, 30,000. So this is 2016. Okay, so 30,000. Class 2 we have motor vehicles and what else? Okay, we only have motor vehicles, so um, 130,000. 130,000. Plus 3 we have um, furniture and office equipment, and then plant and machinery. So we have two. So we have 10,000, 510,000 plus furniture 60,000. So 60,000 like this. So this is class 3. So you add them together. Okay. Then class 4 we have, so class 4, you know, class 4, um the ad says that for class 4 the assets should not be, even though buildings are all class 4, but buildings should not be put in the same class. Okay, if the buildings are not similar. Okay, so if the buildings are not similar, they have to be placed in different classes of class 4. So in this case we can have class 4A and class 4B, but they are all class 4. Okay, but the only thing is they are different buildings. Okay, because one building is a factory building. This is a factory building, and then this one is an office building. So they are two different buildings. So you don't add them together. So let's say class 4A is factory building, so 800,000. So I'll put my 800,000 here. Then class 4B is the office building, 420,000. I'll put my 420,000 here, like this. Okay, now we are coming to calculate our capital allowance for 2016. Okay, now the company started operation from 1st April to 31st December in 2016. So we need to know the number of days from 1st April to 1st December. So that is what we need to know. So April is how many days? April is 30 days. May is 31. May is 31 days. Um, June June is 30 days, right? July July is 31 days. August August is 31. September is 30. October October is 31. November is 30. December December is 31. Okay, so when you finish, you add all of them together. So how many days? When you add all of them together, we are getting um, from here, we are getting 275 days. 275 275 days. Okay, let me check. 275 days. Okay, that's good. Okay, so we are going to calculate capital allowance over 275 days. Okay. So our capital allowance will be class one is 40%, class two is 30%, class three is 20%, class four is 10%. This one too is 10%. Okay. So our capital allowance will be 30,000, okay, times 40% times 275 over 206 365 days. You see, that's how it will be. Okay. So that's what we'll get for um so class two will be this, okay, or 130,000 times 30% times 275 over 365. Okay. Okay, class three. 570,000 times 20% times 375 over 365. Okay, class four. 800,000 times 10% times 275 over 365. Like 10%. Okay. So we have class 4B. Well, 420,000 times 10% times 275 over 365, like this. Okay. It's supposed to be 10%. Okay. Okay, so these are our capital allowances for 2016. So our next book value will be this minus this. So it will be the same throughout, like this. Have you seen? Okay. So that's 2016. Okay, let's come to 2017. For 2017, we will bring the net book value brought forward. So all these figures, we'll bring them here. Okay, that's the opening. Then we have to check whether there was addition. Were there any additions in 2017? Did the company buy assets in 2017? So that is what we need to go and check. So that is where we have to come to this place. Okay. Gross rental income. This is not assets. Registration of trademarks at a cost of 75,000. Trademark is an intangible asset. So an intangible asset is class 5. Do you get it? So it means in 2017 we have to add another class here, class 5. That will be for 2017. And the trademark at the cost of 75,000 in respect of the company's personal hygiene soaps, that is to last for 10 years. The research and development expenses incurred in connection with these soaps amounted to 15,000, and the company intends to expense it. So the company came up with a new soap, a new personal hygiene soap. But they before they came up with the new soap, they had to do research and development to find out whether people will buy the new soap, and then they had to also develop the soap, come up with the ingredients for the soap and all that. And the cost incurred to do the research and the development is 15,000. Okay. And the company intends to expense it. So the company want to expense this 15,000. So do you think the company is right to expense it, or they should capitalize it? What do you think? Research and development. Mm-hmm. Do we do we capitalize research and development, or we expense it? Okay, so the act says that the Income Tax Act says that research and development should be expensed. We don't have to capitalize research and development. So if they are saying that they are going to expense it, that means they are right to expense it. So you don't have to touch this. The legal cost, the legal cost incurred to the legal cost incurred to complete the registration of the trademark was 5,000. You see, when you are registering a trademark, there are legal expenses. Okay, we need to involve a lawyer and all that. And so that legal cost. Do we have to capitalize it, or we have to expense it?
You have to expense it.
Okay, that's good. Okay. Legal cost has to be capitalized. Do you get it? It is part of
Why?
the legal
A
cost.
tangible asset.
Yeah, it's part of the intangible assets. Okay, it is in
Okay,
connection
okay.
to the acquisition of the trademark. But the research and development is not connected to the registration of the trademark. So that means our total trademark cost will be 75,000 plus 5,000. So we'll get 80,000. So we'll put 80,000 here. So that's the class 5. Okay, so let's see whether there are other additions. Okay, so we dealt with this. Okay, a donation of 120,000. Okay, this is not, it doesn't have to do with um capital allowance. Depreciation, okay. Replacement of two motor vehicles engines costing 51,000. This one, replacement of two motor vehicle engine. So this is a capital expenditure. Okay, if you replace a motor vehicle engine, it is a capital expenditure. So it means we have to add this 51,000 to class two, because motor vehicle is in class two. They get it. So we will have an addition of 51,000 for 2017, which is the replacement of the engine of the motor vehicles. Okay, then let's continue. Exceptional costs amounting to 150,000 as a result of the production manager sustaining an injury whilst at work on one of the production lines in the factory. The production manager was rendered incapacitated and resigned as a result of the incident. 35,000 of the costs relate to the payment to the production manager as severance pay. 110,000 was used to acquire additional computers. Okay, so this amount has to be added to computers. 110,000. Okay. Was used to acquire additional computers. So additional computers will increase by 110,000. So computers 110, 123. Okay. Was used to acquire additional computers. The remaining 5,000 of the cost represent fines imposed by the factory in, inspectorate department of the government following the incident. Purchases of computer server for accounting and human resource needs at a cost of 20,000. Okay, so the company also bought computer server 20,000. So this one too will come to, so we add it to this. So 110,000 plus 20,000 like this. So the rest there's no addition. The rest of the classes there were no additions. Okay, so we have to add everything together here. So this plus this. So we do for all of them. Okay, have to express all of this. Oh, okay, so when we add everything together, we are getting this. Okay, okay, so that's 2017. So now before we calculate our capital allowance, so this is for the full year, so we don't have to apportion it. So this will be 40% like this. This one will be 30%. Uh, this times 30%. This one will be this one will be 20%. So this times 20%. This one will be this one will be this one is class what? Class four. Okay, class four is on straight line basis. Class four is on straight line basis. So it means that we are not going to use this figure. Okay, we are still going to use the original figure of 800,000 because class 4 is on straight line basis. So it will be this figure 800,000 times 10%. Okay, then this one to the same. Okay, and then class 5 is based on the useful life. Class 5 is based on the useful life of the intangible assets. So we have to go and check the useful life of this asset. So where is it? They said the trademark will last for 10 years. But the useful life of the trademark is 10 years. So it will be 80,000 over 10 like this. 80,000 over 10. So every year it will be capital allowance will be 8,000. Okay, so our written down value brought down will be this minus this. Okay, so we do for all of them like this. Okay, and you underline this. Okay. So we are done with our capital allowance for 2016, 2017. So we have to add all the capital allowance for 2017. It's 332,690. Okay. And then we also have to add all our capital allowance in 2016. So it will be, have to add all of them like this. Okay, so total capital allowance. Capital allowance. Okay, so we are done with the first part. So then let's go to the next part. So this is please do you take notes, or are you able to write the figures? I'm too
Yes,
fast.
somehow.
Okay, okay.
Mm.
Okay, I will share the spreadsheet with you so that
The video, yeah, all that.
uh, because as for as for Excel, I just be dragging it and I'll be getting the figures. But you have to take your time to calculate it. Okay, so this is a capital allowance question. Let's do the chargeable income. Okay, so as we learned earlier on, when it comes to the chargeable income, when a company submits their financial statement to GRA, GRA will study it and go through it to see that they have not included any item that shouldn't be included. So what we are coming to do right now is we are coming to study all the notes here and see which ones should not be included and which ones should be included in getting the chargeable income. Okay. And always they start with the profit after tax or the net profit, and then we make the adjustment from there. Okay, so let's start. So the same principle, you write the name of the company, Sechiwa Anan Limited. Then computation computation of chargeable income for the for 2017 year of assessment. Okay, then you underline it. So you start with net profit. The company's net profit from the question is 672,800. Okay. So 67 to 800. So 67 to 800. Okay. Hey, 76 to 800. 76 to 800. Okay, so this is where we are coming to do all the adjustments. Okay, we are going to take it one by one. One. So all these items here were included to arrive at this figure, 762,800. So some of the items shouldn't be included. and some of the items should be included. So we are going to take all the notes one by one and see which ones we should include and which ones we should not include. So one, gross rental income of 180,000 received from the leasing of one wing of the office building. So the company is into production of soaps, hygiene soaps, okay, personal hygiene soaps. But the company rented part of their office building, and the rental income was 180,000, and this rental income has been included in this figure. Do you get it? Okay, so when it comes to tax, okay, rental income are taxed differently from business income. If you are not doing, if you are not a real estate company where your business is renting and all that, but if you are into other businesses and then you rent part of your your facility or building, okay, that rent income is taxed separately. Okay, you cannot add it to your your business income, your actual business income, and be taxed. So for financial reporting purposes, you can add it as other income. But when it comes to taxation, rental income is taxed separately. Okay, so it means you have to take out this rental income out of this figure, because that this figure is not going to be taxed here. It's going to be taxed in a different way. Okay, rental income, you pay a withholding tax. What we call withholding tax. Do you get it? Withholding tax. So the person who gave you the rent income or the lessee, okay, will withhold if it's a commercial rental property, the person will withhold 15%. So the person will withhold this 15% of this amount. Okay, but if it's for residential purpose, the person will withhold 8% and give you the balance. So like if for instance you are going to rent a building, okay, under normal circumstance, you have to withhold 8% and give the rest to the landlord. But in Ghana, you can't do that. The landlord, the way they will fight you. But that's the law. That rent income, there's a withholding tax of 8%. So if the total rent you have to pay is, let's say, 5,000 cedis, you have to withhold 8% and give the balance to the landlord. But the amount that you have withheld, you have to go and pay to GRA. It's not like you are withholding and you are spending it. You have to pay that amount to GRA. So rent income is taxed differently. So it means we have to take it out of this amount. Okay, so less gross rental income. Okay, that's 180,000. 180,123. Okay, then what else? The company, there's one item we need to look at. The company made a loss in 2016, last year. The company commenced business operation on 1st April 2016 and had assessed loss of 520,200. So if you make a loss in the previous year, okay, you can that loss is a deductible. It's something that you can deduct for tax purposes. So it's like a compensation for what you lost the previous year. Okay, so you have to take out the loss the company made the previous year out of the income. So it's like a tax relief. Okay, so you have to add less um, net loss In 2016, the company made a loss of how much? 150,200. So 150,200. Okay, there's a loss. So you take it out. Okay. Then what else? Um. Okay, we have dealt with this. We don't have to do anything to it. Okay. A donation of 120,000 worth of furniture was made to a local government assisted school as part of the company's corporate social responsibility program. Okay, so this is a donation to a worthwhile cause. Okay, if you donate to a worthwhile cause, it is also a deductible. It's also deductible for tax purposes. So this has already been deducted. So we don't have to do anything about it. So we leave it like that. Then depreciation of fixed assets of 57,000. So as we learned earlier on, tax deals with capital allowance. They don't deal in depreciation. So we have to add the depreciation back to our gross profit, our net profit. So depreciation, we have to add depreciation to our uh, net profit. So depreciation is 57,000. Okay. Then let's continue. Replacement of two motor Replacement of two motor vehicle engine costing 51,000. Okay, so they deducted this figure, okay, from the profits. So to get this net profit of 762. But we said that this is a capital expenditure. The replacement of motor vehicle engine is a capital expenditure. So the company made a mistake to deduct it from the or to treat it as a revenue item. So we have to add it back. This figure we have to add it back. So 51,000. So that will be um, the motor vehicle engine replacement. That will be 51,000. Okay. Then what else? Um, Exceptional cost amounting to 150,000 as a result of the production manager sustaining an injury. Okay, so this is the breakdown of the cost. 35,000 of the cost relate to the payment to the production manager as severance pay. Okay, this is fine. 110,000 was used to acquire additional computers. So this amount is a capital expenditure. So we have to add this back. This 110,000 is a capital um, expenditure. So so that will be purchase of computers. So purchase of computers. So that will be 110,000. 110, 123. Okay. What else? The remaining 5,000 of the cost represent fines imposed by the factory inspectorate department of the government following the incident. So because of the incident that happened, the production manager sustaining an injury, the company was fined an amount of 5,000. And the act says that if you pay any fine or penalty or anything because of breach of law, it's not an allowable expense. Let's say you didn't pay your tax on time and then you have to pay a penalty. That expense is not an allowable expense. Okay, so this figure, the company did not follow the protocols or the policies and somebody got injured. So this fine is not allowable expense. So we have to add this back. So fines. 5,000. So you have to add it back. And then what else? A company purchased computer server of 20,000. So now we have computer server 2 is a capital expenditure. So you have to add this back. So 20,000. Okay, so and what else? Okay, we are done. Okay, so we are done. So we have to add all of them together. 675,600. Okay, after that, then we did less capital allowance. We have to deduct our capital allowance so that we can get our chargeable income for 2017. So what was the capital allowance in 2017? The capital allowance in the capital allowance in 2017 is is how much? Where is it? It's 332,690. So you add all the capital allowance in 2017. We got this. So you come and add it here. Okay. Oh, capital allowance 332 690. Okay. So now our chargeable income is this minus this. Okay. Then now we are going to be taxed. Now our tax is 25%. The corporate tax is 25%. The tax is what 25% of this figure. 25%. Okay, so the company is going to pay tax of 85,000 727.40. Okay, 85,727.40. All right. Is there any question? Are we okay? Hello, hello. Can you
Yes.
hear me?
Yeah. Yes, we can hear you.
Oh, okay. Are we okay?
Yes.
Okay. So this is how we solve. That there are lots of questions, but time will not permit us. Okay. So today we are going to do withholding tax. Okay. We are going to we are going to treat a new topic, withholding tax. But we need to meet in the course of the week to solve more questions on business income. This one we solved it to see how the business income question is solved. Okay, so you also have to go and practice more, and then so that you'll be good at it. Okay, we are coming to look at withholding tax. Okay, so I believe that if you are working in accounting department, okay, you must have come across withholding tax. Okay, withholding tax, and as the name suggests, it is it is it's a situation where um, a certain portion of your income is deducted, and then the rest is given to you. Okay. And a typical example that we can all relate is PAYE, pay as you earn. At the end of the month, before your salary will hit your account, um, PAYE will be deducted from it before you get your net. Okay, so that is a form of withholding tax. Do you get it? Okay, and it is all a way of widening the tax nets and making sure that people pay taxes. Okay, okay. So what's the definition of withholding tax? Withholding tax is a tax deducted by source by an authorized withholding agent and accounted for later to the Commissioner General. So it's a tax deducted as source. So before you get your income, it has already been taken out. Okay, and then whoever took that money has to go and pay to GRA. So like in your company, if your company deducts your withholding tax, the PAYE, the company has to go and pay to GRA. Okay. And what time do you pay with withholding tax? Withholding tax is paid. Let's say your company has taken your PAYE. At what day or what time is the company supposed to go and pay to GRA? Okay. So the company has to go and pay to GRA 15 days after the end of the calendar month in which the tax was withheld. So if your tax was withheld in January, the company has to go and pay by 15th of February. He has to go and pay to GRA by 15th of February. So example, withholding tax deducted in the month of March 2016 shall be paid on or before the 15th day of April 2016. Okay, so when you make payments within the 15 days, you have to go and pay to GRA. And withholding tax certificates. So if let's say you are going to rent an apartment, okay, for let's say business purpose, commercial rental property, you want to rent a place for your business, and then you told the landlord that GRS says that for commercial properties rental, the withholding tax is 15%. So you have withheld 15% of the amount that you have to pay. So if the landlord says you should pay 10,000, you have deducted 15% of 10,000, and you are paying the net to. So if the landlord says the total amount is 10,000, 15% of 10,000 will give us how much? Um, will give us 1,500. So you have deducted 1,500, and you paid 9,000, 8,500 to the landlord. But in this Ghana, you can't do that. Even though you can do it, I mean that's a law, but our laws don't work here. So if you try that, the kind of confusion that will happen. Oh, okay. So instead of 10,000, you have withheld 1,500. So this 1,500, you have to go and pay to GRA. And when you pay to GRA will give you a certificate. It's called withholding tax certificate. And that certificate is not for you. It's not for the one who paid. It's not for the one who went to pay to GRA. You have to go and give it to the landlord because you deducted it and went to pay on behalf of the landlord. So it is not your own tax, it's for the landlord. So you have to go and give the landlord a certificate to show that indeed the tax that you withheld, you've gone to pay at GRA. And it will be a tax credit to the landlord. So at the end of the year, if the total tax that the landlord has to pay to GRA is um, let's say 3,000, GRA will deduct the 1,500 out of it. Because the person has already paid 1,500. Okay, the person will show the withholding tax certificate to GRA that, oh, um, I rented my place and somebody withheld 1,500, and this is my tax certificate, my withholding tax certificate. So the person, instead of paying 3,000, will pay 1,500. So that is how withholding tax works. Okay, so that is a tax credit. Okay, so when you make payments, when you go and pay to GRA will give you a withholding tax certificate, and then you have to go and give it to the person who whose money you withheld. Okay, now there are some people or there are some companies that are exempted from withholding tax, which means that if you are making payment to them, you can't deduct withholding tax and go and pay to GRA. You see, there are some companies who are exempted from withholding tax. So some invoices. Okay, if you buy some item from some company, you will see that they have stamped on it. This company is exempted from withholding tax. It means that you cannot withhold any payments from this company. But before you can be exempted from withholding tax, there are certain conditions that you have to meet. Okay, I mean withholding tax. The whole idea is for people to be tax compliant, for them to pay their tax and all that. Okay, so if you are tax compliant, you pay your tax, you file your tax returns, you do everything, everything is on point, then um, you, you are likely to be granted withholding tax exemptions. So let's look at the conditions. One, the taxpayer must have registered for all relevant tax types administered by the Commissioner General. So if you're a company, you must register for all taxes that relate to you. So a company, you should register for PAYE for your employees. You have to register for VAT. Okay, you have to register for NHI, your Get Fund. Okay, and then you also have to register for what else? Okay, I think these are the main ones. Okay, all right. So and then you also have to register for corporate income tax. Okay, so if you are registered for all these taxes, okay, then it means you are you are compliant. Okay, then the next point is the taxpayer should have submitted all relevant tax returns. So you have to submit your tax returns, okay, like your PAYE, your VAT, excise duty, communication service tax. So this one relates to the telecommunication industry. So it's not for every company. The communication service tax is not for every company. So it's basically the tax that is relevant in your industry. Okay. Then the third point is the taxpayer should have paid all taxes which are falling due. So you must have paid all your taxes. Okay. The next point is the taxpayer should have been audited for a period within the last 3 years. So you should have an audited account for the last 3 years. Then the next one is the taxpayer should demonstrate that suffering withholding tax will lead to cash flow problems. So if withholding tax is like somebody is taking part of your money and going to pay to GRA, and you see that's an outflow. That money is not coming to you. So maybe if you are having liquidity issues and if companies or your your customers withhold payment to you, it will affect your cash flows. Now you have to let GRA know that okay, this is the situation you are facing. Okay, this I have cash flow problems, this and that, and if um, my customers withhold part of my income, it will affect my cash flow. So you have to demonstrate that to GRA. Okay. Okay, let's continue. So what time do you file withholding tax return? Okay. So if you have withheld from a company, okay, you bought some items from someone, and then you have taken parts of the money as withholding tax. You have to go to GRA to file the withholding tax return and pay the withholding tax return. So we are looking at when do you have to file withholding tax return. Okay. Now withholding tax return should be filed 15 days after the month in which the tax was withheld. So it's also 15 days after the month. So it's just like PAYE. Okay. The return should contain the following details. So the return that you are sending to GRA, it should contain the following: payments made by the withholding agent during the period that are subject to withholding tax. So you have to in the return you have to indicate all the payments that are subject to withholding tax, and then also the tax withheld for each payment. So all the payments you have to indicate how much was withheld, how much was withheld. Then you have to state the name, the address, and the TIN number of the withholdee. So the withholdee is the person that you took or you withheld his or her money. So you need to state the name of that person, his address, his TIN number, and all that, and then file it at GRA. But these days, GRA has come up with this. They are saying they are going cashless now. They have now everything is online. Okay, if you go to their portal, you can file all your returns. You can even pay on their platform. So now you don't even have to go to their offices to pay any. You don't have to go there to file return or make payments. Now everything is online. So if you go to their platform, you'll be able to. So now let's look at the various withholding tax rates. The various withholding tax rates. So supply or use of goods exceeding 2,000 Ghana cedis per annum is 3%. So if somebody supplies you goods, okay, and the value of the goods exceed 2,000 Ghana cedis, you have to withhold 3% of that amount, okay, and pay the rest to the person, okay, and pay the rest to the person. And on account, so there are two types of withholding tax. We have withholding tax which is final, and withholding tax which is on account. So withholding tax which is final is that once you once the person withhold parts of the income and pay to GRA, you don't pay any tax on the rest of the income again. You see, like the rent. If you deduct 8% as rent, as withholding tax from the rent you have to pay to your landlord, the balance that you give to the landlord, the landlord will not pay any tax on it again. So that is what we call final withholding tax, which is final. But on account means that even after the withholding tax, the rest of the money is still subject to tax. So that's the difference between on account and then final. Final means when the withholding tax is paid to GRA, you won't pay any tax on the balance or the amount that you give to the person. But on account means even after withholding, the difference that you pay to the person will pay another tax on it. Okay. So supply of goods is 3% on account. Supply of works is 5%. So works is has to do with construction, building, installation, okay, and all that any kind of works. That is what 5%. Goods has to do with tangible goods. Okay, and that's 3%. And services is what? Services is 7.5%. Okay, services is 7.5%. Dividends is 8% final. Dividend is 8% final. Interest, excluding individual and resident financial institutions, is 8%. Then rent of residential property, 8%. Rent of non-residential property is that's commercial property is 15%. Lottery winning, if you win a lottery, okay. Lottery winning exceeding if you win a lottery which exceed this amount, 2,592, there's a withholding tax of 5%, which is fine now. Then commission to resident lotto receiver or agent. So a lotto agent or a lotto agent has to pay withholding tax on his commission. Then commission to a sales agent is 10%. Okay, if you pay commission to a sales agent, there's a withholding tax of 10%. It's not easy. Um, Fees or allowance to the resident director, manager, trustee, or board member. So if you pay fees to a director, manager, trustee, or board member, it's 20%. And fees for examiners, invigilators, supervisors is 10%. Okay, so these are the various withholding taxes. And you have to, in the examination, they will not give you this table. You have to remember the various, you have to remember the various with okay, so you have to remember the various rates, but the main ones you should remember is goods and services. Mostly they set questions on goods and services, but at least if you don't remember anything at all, at least this three there, goods, work, services, you should remember. Okay, you should remember that goods is 3%, works is 5%, um, services is 7.5%. Okay, you should remember. Okay, let's continue. Okay, payment exempted from withholding tax. Payment exempted from withholding tax. So it's not all payment that are subject to withholding tax. Some of the payments are exempted from withholding tax. So one, premium paid to a resident insurance company. Premium paid to a resident insurance company. So if you pay a premium to your insurance company, you can't withhold part of it. Okay. Two, payment for the sale of goods, which constitute the trading stock of both the vendor and the purchaser. If the vendor and the purchaser are into the same business, okay, maybe you are all into the same um, um, they are in the same business. Let's say iron rods. You're all in the same business. You're all in the same cement business. Okay, that's that's kind of supply is exempted from withholding tax. Okay, and in the examination they can bring this. Okay, so remember that if the two parties are in the same business, they are doing the same business. There's no withholding tax. Then the next point is interest paid to a resident financial institution. Interest paid to a resident financial institution. if you go for a loan and you have to pay interest, you cannot withhold part of the interest and pay the rest to the bank. Even the bank will not even allow that. So interest paid to a resident financial institution is exempted from withholding tax. Then the next point is payment made to persons specifically exempted from income tax. There are people who are exempted from withholding tax. Sorry, who are exempted from tax. Like for instance, the president of Ghana doesn't pay tax. Doesn't pay tax. Nana Akufo doesn't pay tax. So if you make any supply to him, that supply is exempted from withholding tax. Okay, the next point is dividend paid by a resident company to another resident company, which directly or indirectly owns at least 25% of the voting power in the company, paying the dividend. So if dividend is subject to withholding tax of how much? Is it 8% or so? Dividend is subject to withholding tax of 8%. Okay, but if the dividend is paid to shareholders, so if the shareholder has at least 25% of the shares in the company, um, the withholding tax, that's the dividend is exempted from withholding tax. If that shareholder has at least 25% of the shares or of the voting power in that company, then that payment or that dividend is exempted from withholding tax. So these are the things you should remember. Okay. Okay. So threshold for withholding tax. Okay. So as we said, the supply of goods, works and services which is less than 2,000 cedis shall not attract withholding tax. So if the goods is less than 2,000 Ghana cedis, you don't pay tax on it. But if it's more than 2,000 Ghana cedis, that's why you have to withhold. Okay. But if um, let's say you have a supplier, the person supplies you on periodic basis. Okay. So if the accumulated supply is more than 2,000, then that supply will be subject to withholding tax. Okay. If just one supply and then it's not up to 2,000, it's exempted. But if the person does supplies you all the time, okay, it's a regular supplier, and if the total supplies is more than 2,000, then you add all of them together, and then you charge the withholding tax on it. Okay, so let's look at an example. For Florida Technical University engaged Joby Ventures to supply the institution with goods. The following are the values of the goods supplied by Joby Ventures in the 2017 year of assessment. So these are the value of goods that Joby supplies to Koforidua Technical University. So 2017, 560 Ghana cedis. That's February, March 280, um, um, May 900 cedis, October 1630. So this does not exceed 2,000. So this will be exempted. This one too does not exceed 2,000, but this will be exempted. And if you add the two together, it will still not be 2,000. So it will be exempted. So but if you add all of them together, it will be more than 2,000. Okay, so that means you have to pay withholding tax of 3% on all of them. So the solution is so the 560 is exempted because it's not more than 2,000. The 280 it's also exempted, and because it's not more than 2,000. And if you add them together, you are getting 840, which is not up to 2,000. If you add 900, the 900 to it, the 900 to it, that one too is not up to 2,000. So it means no withholding tax. But if you add the 1630, 1630, 1630, if you add those together, that one will be 3,370. So it means this is more than 2,000, so it will be subject to withholding tax. So it means the withholding tax you have to pay in the year is 3% of this. So 3% times 3,370. So this is 101.1 Ghana cedis. Okay, let's continue. Now let's look at the withholding tax base. Withholding tax base. So how do we calculate withholding tax? That's what we are coming to look at. How do we calculate withholding tax? Now, withholding tax shall be computed on the gross amount paid without deduction of expenses or allowances. The withholding tax base shall be exclusive of any VAT. So, the withholding tax is a gross amount, it is paid on the gross amount of the goods or services without any tax. Do you get it? So, if let's say you supply, now these days, you know, when you buy item, there's VAT on it. So if let's say you bought goods of 5,000 cedis, okay, the gross amount of the goods is 5,000, but there are taxes on it. We have NHIL, which is 2.5%. Then we have Get Fund, which is also 2.5%. Then we have COVID-19, COVID levy. Now they brought this COVID levy, which is 1%. Then so this is 2.5% times 2.5%, 5,000 times the cover levy is 1%. 1% times 5,000. Then you add all of them together. Before you charge your VAT, you see, VAT is 12.5%. So when you go and buy something from supermarkets, you will see that they have done these calculations. That there will be VAT here. When they give you the receipt, you will see that they have done something like that for you. So the VAT is to 12.5%. So the total amount is this plus this. So 596. So you see, and this is the amount that you have to pay. Even though the value of the goods is 5,000, because of all the taxes and everything, now you have to pay 5,962. You see. So now the question is, when you are coming to withhold, okay, are you going to apply the withholding rate on this or this? So that is what we are looking at. If you are going to apply withholding tax on the supply, are you going to use the gross amount or you are going to use the amount? So this amount includes all the taxes. And the act says that withholding tax should be applied on the gross amount without any tax. You see, without any tax. So in some questions, they will give you the amount including VAT and all that, and they'll tell you to find a withholding tax. It means you have to take out all the taxes, and then whatever will be left, that you apply the withholding tax on. So withholding tax is applied on this amount, not this amount. Okay. All right. So we have an example here. The cost of work liable for withholding taxes 118 million inclusive of VAT, NHIL. So this is like it includes all the taxes. Determine the withholding tax payable. Okay. Now we know that works is what is the withholding tax for works? Works is 5%. Okay. And they are saying that the cost of this works is 118 million, but this works is includes all the taxes. So, but we all know that withholding tax should be applied on the gross amount, not the amount including the VAT and all that. So we need to find out the amount without without taxes. Okay, we need to find out the amount without taxes before we can now apply our withholding tax. So let's see how we can find the amount. So the amount including VAT, including tax, is 118 118 million. So 118. So this one includes taxes, and we can't apply withholding tax on this. Okay, we apply withholding tax on the gross. So how do we take out the taxes so that we can find the withholding tax? So you should remember that before they arrived at this figure, they went through this process, like this process. You see, the gross amount was this: NHIL, gas fund, COVID, VAT, before they got here. So this amount is like this amount. So we are looking for this amount. You see, we are now looking for this amount. So how do we find this amount? So it's like we are trying to go back to the gross amount. So how do we find that? Okay, so what we need to know is we know that the taxes are, let's find out all the taxes. We have NHIL is 2.5%. We have Get Fund is 2.5%. We have VAT. VAT is 12.5%. When you add all of them together, you are going to get how much? Um, 17. No, there's COVID. Now they brought COVID. So COVID levy is 1%. So if you add everything together, you are going to get 18.5%. So it means that our VAT, our taxes is like 18% of this. Okay, but remember that the VAT, okay, even though it says 12.5%, okay, the VAT is calculated in a certain way. It's when we're calculating the VAT, when we're calculating the VAT, you can see that NHIL is 2.5% of this. Get Fund is 2.5% of this. Corporate levy is also 1% of this. But VAT is not 12.5% of this. You see, VAT is not 12. you have to add all the taxes together, okay, before you find 12.5% of this amount. Okay. So it means that effectively the VAT rate is more than 12.5%. Okay. If you apply 12.5% of 5,000, you won't get this. So if people say, oh, the VAT rate is 12.5, but if you apply 12.5% times 5,000, you will get 625. Meanwhile, the VAT is 6625. Do you get it? So the VAT is not 12.5. Okay, you can't apply 12.5 on this end because it includes all this. So which means that the total percentage will not be 18.5 because the VAT is not 12.5. The VAT is not 12.5. It's more than that. So we want to know how much the VAT is. So let's assume that there's a supply of goods of 1 cedi. Supply of goods of 1 cedi. Okay, you pay NHIL of 2.5 of 1 cedi. So 2.5% of 1 cedi. So you get this. Then you pay get fund of 2.5% of the 1 cedi. Then you pay COVID of 1% times 1. And after that, the VAT, you don't apply it here. You see, you have to add all of them together before you have to add all this together like this. Before you can now, so this is not VAT. So before you can now calculate your VAT. So your VAT is 12.5% times this. So 0.1325. So it means that effectively the VAT is what? 13.25 of the 1%. Do we get it? VAT rate is 13.25% of the gross amount. Okay. So for instance, um, for instance, if you look at this workings that we did, the gross amount is this. If you apply 13.25% of the gross amount, it will give out the VAT. Have you seen it? Okay, so the VAT is 13.25%. Okay, so now since we know that our VAT is 13.25%, we can now add all the percentages. So our total percentage will be NHIL plus get fund plus COVID plus VAT. So the effective tax rate is 19.25%. So the whole tax is 19.25. Okay, 19.25%. So it means that this 118, okay, includes 19.118 million, includes VAT, includes tax of 19.25. So if we take out this 19.25% from this, we are going to get the gross amount. Okay, so it means to get a gross amount, what you have to do is you have to divide 118 by 19.25%. So this one it will take out all the taxes. So that means the gross amount is 612. You see, the gross amount is 612. Okay, 0.99. So that when if you add all the taxes to it, you get 118. Do you get it? Or have I made a mistake? I'm coming. 118, 19.25. Ah, okay, let me see. Says 1, 2. Okay, it looks like that this gross is more than the amount. It should be less than. It should be less than this. Okay, so I'm coming. Let me see the problem. Okay, what you can do is, so 19.25% of 19.25. Okay, what you can do is x plus 19.25%. 19.25% of x will give you 118. Okay, 118. Okay, so x will be how much? Um, that'll be 1 plus 0.1925. So it will be 1.1925. Okay, 1.1925. Okay, so that means it will be 1.1925. 1.1925. Okay, so that will be the gross amount, which will be 98.95. 98.95. So this is the gross amount. Okay. Before now, you can apply a withholding tax of 5%, because this is works. So works is 5%. So 5% times 98.95 will give you 4.94 million. So it means that you have to withhold 4.95 million Ghana cedis as withholding tax. Okay. Is there any question? Hello?
Oh,
Are you okay?
yes, sir.
Hey, you people are
Yeah, we are
sharks.
done.
In fact, you are sharks. So you understand the concept of withholding tax and all that, how to calculate it, and if you are given the VAT inclusive amounts, how you can find the gross amount and all that.
Yes, sir. Yes,
Hey,
sir.
oh, that's good. That's good. That's good. That's good. Okay, very good. So in exams, you face situations like this. So if you know how to do your calculations, you'll be good to go. Okay, so that's withholding tax, and then so let's look at advantages of withholding tax. What are the advantages of withholding tax? It involves little or no cost of collection. So GRA doesn't have to chase people for withholding tax. Okay, like for instance, if you are paying your, assuming that the law is working, if you have to pay rent, you just withhold parts and go and pay to GRA, and so GRA doesn't have to chase the landlord for the tax on the rent. The person who is paying will just take part of it and go and pay the withholding tax. Two, it saves time for revenue officers to attend to other duties. Okay, so revenue officers at GRA do not need to be chasing people to pay their taxes. Okay. Then the third point is it helps to extend the tax net. Okay, so through withholding tax, people will be made to pay tax. Okay, because I am the one paying you, and before I pay you, I'm taking your the tax out and pay you the rest. So whether you like it or not, you pay tax in a way. Okay, so it helps to extend the tax nets. Okay. Then the next one is it ensures faster mobilization of revenue. It ensures faster mobilization of revenue. So GI doesn't have to wait at the end of the year before you come and pay your tax. So this one, in the course of the year, because of withholding taxes, GI will be getting money all the time through withholding tax, without waiting for the year to end for people to pay their taxes. Okay, so we are done with withholding tax. All right, so withholding tax is quite straightforward. Okay, so the next time we are going to do partnership, taxation of partnership business. All right, that's what we're going to do, and then we'll do VAT and then capital gains, and then we are done. So we have three topics to go. Okay, all right. So thank you very much for joining today, and enjoy the rest of the evening.
Thank you too. Same to you.
Okay, yeah, bye.
Bye.